Hello, this is Caleb Barney with Russell Real Estate, and today I wanted to go over an article from Housing Wire titled Optimism Spreads Across the Mortgage Industry at the Start of 2023. Now, this article is actually about 6 days old now, and at the time, their little header here, subtitle, is that mortgage rates this week declined 15 basis points to 6.33%, according to Freddie Mac. Well, interest rates have actually decreased even further since this came out. And when I go to Mortgage News Daily, you can see that the average 30-year fixed rate is actually closer to 6.17% right now. So definitely good news that is there for anybody in the housing industry, whether it's mortgage professionals, title, real estate agents, and then obviously for people who are looking to buy houses as well. And, a lot of times sellers think that this doesn't necessarily affect them, but it really does, because when interest rates go down, you're going to have more buyers looking to buy and that can afford to buy. So oftentimes when you have more buyers, you'll have more demand, obviously, and then that can increase the interest in your property that you're looking to sell. Not only that, oftentimes when you're selling a house, you're usually buying a house as well if it's your primary residence. That's obviously not always the case if it's an investment property or a second home. But yeah, I mean, lower interest rates within reason are reason for optimism in the housing industry. So some people are actually predicting that interest rates may go down into the 5 handle this year. For example, you have Mortgage Bankers Association saying that their forecast is for the 30-year fixed rate mortgage to reach 5.2% at the end of 2023, which would be pretty fantastic. But for me, as a real estate agent, I really think that the most important part is just that we have some sort of consistency. And unfortunately, they do expect a dose of volatility, as they put it here, with the interest rates still. And that's what we really saw throughout all of 2022 when we started the year in January with an average 30-year fixed rate mortgage at 3.1%. And we actually topped out in the end of October nearing 7.5%. So obviously, interest rates basically were ticking up the whole time, throughout the entire year. But just that volatility of the swings of going up or down a half percentage point in 1 week just caused a lot of buyers and sellers to kind of sit on the sidelines and wait things out until the waves weren't quite as choppy there. So yeah, I mean, there's still going to be volatility, but it does look like there's going to be some good news for anybody in the housing industry. I know that, see, they actually have Mortgage News Daily here at 6.15%. So again, we're basically right there, 6.17% here. So where are rates heading to? I already said what MBA, Mortgage Bankers Association, predicted, but what Realtor.com is predicting, or George Ratiu, is saying that he's actually expecting mortgage rates to stay within that 6 to 7% range for the foreseeable future. The Federal Reserve has still been talking tough, and I think that's also just partially because they don't want people going out and spending too much money. They are still trying to get inflation under control, and a lot of people are arguing that inflation is under control because CPI data is actually lagging, and it takes into account some things that in housing and in rent prices that are based on delayed data. So a lot of people think that inflation is already under control. Nevertheless, Realtor.com manager of economic research is still expecting mortgage rates to stay in the 6 to 7% range. And then Todd Delkey, based out of another mortgage company, is just reminding people as well that, the average mortgage rate over the past 40 years is actually 7.38%. So yes, it's high because the past 3 years we've seen an average at 3.36, but that just wasn't really realistic or feasible for the long term. That was a lot of odd circumstances kind of hitting in a perfect storm. So, the last thing that I do want to point out for any housing nerds out there is that basically the interest rates for your mortgage follow the 10-year treasury note almost almost verbatim. As one goes up, the other goes up. As one goes down, the other goes down. And usually there's a spread between what the 10-year treasury note is and what mortgage interest rates are. And that spread has been basically 75 to 80 basis points over the past 10 years. Well, right now, we're at 200 basis points above what the 10-year treasury note is, which basically just indicates that there is a lot of wiggle room to actually decrease that and lower interest rates to get it closer to that 75 to 80 basis points above the 10-year treasury note. So as of the Wednesday prior to this, so that would be the 11th, the 10-year treasury note was actually at 3.54%. So at that point, 200 basis points would actually be at 5.54%. So that's really what we should be looking to expect. And if I had to make a prediction, which this obviously isn't my specialty, I'm a real estate agent, not a loan originator or anything in the mortgage industry, but I bet that mortgage rates are actually going to be closer to like 5.5 to 5.75 by the end of this year in 2023. If you have any questions on this, or if you just have your own predictions, feel free, leave your comments in the section below, and have a great day.